I hope you're all well. If you're new to the channel, I'm going to basically try and gauge this market as clearly as possible for you guys and make you aware of all the scenarios possible. And if you do appreciate that, please leave a like, subscribe, comment and share this video. Let's get into this Bitcoin update. We can see that we did bounce off extremely nicely off my exact support of 18.6k, which I gave you back in June or July, whenever this had happened. So yeah, back in, let's just say July, although it was the 30th of June. We'll say once we had this wick, I was basically telling you guys this is the wick we can't afford to lose. Reason being is when we had this impulse, you came down, found support, and then you've gone on onwards, and you haven't lost that since. So if we ever lose this, I know we're coming back down to here and we're losing this low. That's guaranteed. So that's why on the way down here, and I remember telling you guys way up here, there's a potential M pattern and an even bigger M pattern, and the larger M pattern's target is down at 18.5, 18.6k. We met that. We load out 18.5, 18.6 in between them two, and we've held that as support. Look, another target over here out of a smaller descending triangle as well over here. We met that technical target. And so when I told you guys when we were down here, I saw a lot of people on Twitter getting really excited, saying, "Ha, told you so, we're going to 14k," as I've been saying for months on end. Now we're going to 14k. But I was telling you guys, even though there's those people out there, I can't flip bearish until 18.6k is lost. So as long as it's not lost, I can't be bearish. I am bullish. And that is why, that's why, as we've seen, since 18.6k, we've actually bounced well over 20, almost 21%. That's beautiful to see. If you appreciate me looking out for you, even though it might not be what the majority want, please leave a like, subscribe and comment just to let me know that you found value, or you listened to what Louis said, or you didn't listen and now you are going to listen, for example. Because here on this channel, I'm going to tell you, if you lose this, you're going down, or if you break above this, you're going up. It's as simple as that. And if you're not doing that, if you're not breaking it, then you're not going to do that. So if I'm telling you guys, if we break 18.6k, we go down. If you don't break it, you're not going down. If you break it, you're going down. So when I mean break it, I mean I want to see the bodies, the red closing, the body closing below this line. I don't care about a wick like that. That's just saying you attempted it, but did you actually close below it? No, the wick was saying you were below it and you didn't like staying below it. Otherwise you would have closed there. It wouldn't have been a wick in the first place. So a wick is telling you that it doesn't like an area and it wants to go an opposite way from it, basically. Pardon me. So I'm seeing a lot of people now also getting excited. So the last time I left you guys said we need to stay above this to head back up. What we do need to see to flip this bullish is for us to actually reclaim this golden pocket, this massive golden box over here. I'm just going to get rid of this green line at the moment. Don't need it. I will get rid of these technical targets as well because we don't need them anymore. But yeah, we were basically saying the fact that you came below this golden box, it's basically a massive signal that it wants to lose the low. It wants to break below this and head to anywhere between 14 and 16k. So that's why we were always preparing for those if certain key levels were lost. For example, the key level that we wanted to see lost, for us to have some belief that we could be seeing anywhere between 16 and 14k, we needed to lose 18.6k. So without losing that, I wasn't going to pull the trigger, because here we're reactors rather than trying to guess where the market is going. So what I'd rather do is prepare for both ways the market can go and then react with what it's actually showing me, rather than just sticking bias and saying, no, we're going to 14k. I've been telling you guys we're going to 14k, when in actual fact, those people have had no validity in saying that. You can prepare for it, but saying you've been calling for it and that it's going to happen with 100% confidence is wrong, because for that to happen, you need to close below 18.6k, and without a close below 18.6k, you're not going to see 16k, you're not going to see 14k, you're not going to see 12 or 10k, as long as you're above 18.6k. And when we did actually come down to there, look at the bounce since, almost a 4k bounce. So that is absolutely amazing to see. Literally a 4k bounce. We're $100 away from a 4k bounce within 1 week. So what you need to do going forward, and as I told you already when we were over here, I said what I would like is for us to actually come back down and retest this as support. You have not done that yet. What is happening? You're running into these EMAs as resistance, and I said what I am seeing at the moment is a little bit of excitement. This orange EMA is the 55 EMA, and you can see that we're actually above it it right now, and it looks like there's nothing above us. But if you've been following the channel for a long while, the reason why I was able to tell you guys this is the bottom is because of a special EMA that I found on the weekly time frame called the 69 EMA paired with the 55. And if we go to that time frame very quickly, you can see that in the past, well, here currently, when they crossed over, where the blue, the 69 goes over the orange, that basically means the bottom was in prior. So it happened there on this candle over here in and around, but the bottom was in prior. You made that higher low, so it's basically the signal that the higher low is about to form and you're going to continue up. And I'm going to show you in the past. If you've been on the channel, you've seen this millions of times, but if you're new, I need to show you this 69, the blue one going, see how it's under and then it goes over right there, and then you can see the bottom was in prior to that crossover. And one more time in the 2014 market over here is very zoomed out, apologize, but you can see over here when the blue was under, nothing. When the blue crosses over on top of the orange one, you can see when that actually happened, the bottom was in prior. So that's how I was able to call this bear market bottom for you guys. We also had a technical target that I got exactly from over there, and that pattern's target was met. And what do I tell you guys? When a pattern's target is met, you usually form a pattern in the opposite direction. So that's why literally since the bottom I said we're going to come up to the 200. That's the only thing I didn't get right. We didn't get to the 200, but I told you once we get up to the 200, we're going to see a 20 to 30% dump. What was the dump size over here? 26%. And then I told you, if we lose 18.6k, we're going down. But as long as we're above it, we're not going down. Did we go below it? No. So when we got to the level of 18.6k, because we stayed above it, that is why we went up. Because you needed to lose it if you wanted to see lower lows. And without seeing that loss of 18.6k, you're not going to see lower lows. So the reason why I wanted to show you this 69 EMA, and I hope you guys are enjoying the video so far. So don't forget to do your part in, like, subscribing. But the reason why I brought your attention to the 69 is because this is what's next, what we're going to run into resistance. We need to see, are we going to start to see candles with wicks to the upside in and around this area? This is what we need to look out for, because if so, that is a signal, yes, we are going to come down in the short term. What I am starting to see, and I'm liking that I'm seeing, is that of course we're above the 20, signaling we're in an uptrend on the daily time frame. We're above the 55, which is a double brick wall. This is what actually should keep you in a downtrend. The final thing is this 69 EMA, and not many people, or no one at all, really knows about it apart from you guys, because I'm the one that worked it out myself and was able to find that it does show the bottom previously on the weekly time frame for Bitcoin. So you can also use it on the daily time frame. You can see we got some nice retests over here, which sent us back down to the 20. The 20 is known as our continuation moving average. So as long as we're holding this as support or staying above this purple line, we should actually continue up. If you lose the purple line, that's when you go down. But if you get above the purple line, that's when you go up. The only final thing before we start heading towards the 200 EMA is this 69. And I do expect resistance. Again, what I like that I'm seeing is that we're above the 20, but also you can almost see that this lighter blue one, the 12 EMA, is almost crossing over, forming a bullish cross. So this is what we've seen over here, this bullish cross, and look how much higher price went after this had happened. So it happened just over there on this candle, we went up 21%. So it's about to happen here. Could we see something similar? Well, that's what remains to be seen. We need to see us actually staying above the 69 and potentially getting a 20% move up towards the 200 EMA in and around 27k. So I can actually get rid of this Fibonacci now. The main reason why we had it is because we need to see the levels. Once we had this impulse to the upwards, we were retracing, going against the trend. The trend is now an uptrend. We're going against it, retracing to the golden pocket. But I've told you guys before, you can come one step lower to the 786. We don't just solely use the fibs. You can see you went under the 786, but that was fine because I gave you guys that pinpoint level of 18.6k, and that's what sent us above the 786 and the golden pocket. So it basically means, and I did warn you guys that this could potentially happen, it basically means that this move under like this was a bear trap. It means we need to completely ignore this move. Just like when we came under, I told you guys that this move above the golden pocket was a bull trap. So this basically became a bull trap because we fell back under. You see here, we came down. and retraced upwards. So after this point right here in the golden pocket, you should make a lower low, but that's not what happened. You created the reversal wave by reclaiming this gold box. You should have never got above it in the first place. Then what happened is you confirmed it as support. So confirm you're now in an uptrend, because what should have happened is a downtrend from that point to 14k. Did you get that? No, because you flipped it right there at 18.6k. So that's why I told you guys, as long as you're above this, you're bullish. If you lose this, you are bearish. Did we lose it? No. That's why we've gone back up and we've actually reclaimed this gold box, which means that the move below now, the move below the golden box, this entire thing over here is all fake. So going forward, again, we need to stay above this golden box. We need to confirm it as support. I'm not saying that we will 100% come down. This is what, again, as I said in the last video, I want this to come down to confirm it as support, and then we have another go at it. But for now, I can get rid of these fibs, and I'm going to leave you with these last fibs. At the moment, you can see that we are going up. So that means that this impulse downwards is finished. So I'm going to measure this impulse from the top to the bottom. You can see that we're actually at the 618 right now. So unfortunately, guys, there is another golden box over here. I'm going to make it red just so you guys understand that this is some sort of resistance that we're at right now. We did not need the fibs to tell us this was a resistance, as we are also using the EMAs also specifically telling us this is resistance and this is resistance. Would you look at that? It's basically the golden pocket. The 55 is on the 0.5 fib and the 69 is on the 0.618 fib. So it's nice to see some confluence in this zone, but it is unfortunately telling me this is a big resistance. So what should actually be expected from this area is obviously a dump down, a retracement back up, and a continuation down. This is what the bears will be telling us all right now, and it is right to say so because we're at two key resistances, the EMAs as well as the Fibonacci's, major key levels of support and resistance. In this case, resistance, because what is happening is we've had this impulse down and you're retracing. Going up is now against the trend, so what should happen is continuation down, lower lows. But if you actually get above this red box and hold it as support, something like this, if you hold it as support, then I'd have to actually make this box green, because then it would flip into support and it would no longer be a brick wall like a ceiling above us pushing us down. It should be a brick wall pushing us up. And so if we were to actually create this reversal wave, it's called a reversal wave. I'm not saying it's going to happen. I'm saying if we create a reversal wave, to create a reversal wave, you should break above the 618, hold the golden box, it's green at the moment, and then you'll head to the 1 fib level, where if you can break above this, you have your 3 targets over here at 27 to 30k. That's why earlier in the video I said if we do break up from here, expect in and around 27k, because we saw a 20% move up over here, and so should see something very similar on the right again, basically from the similar location. But at the moment I have to keep it red, guys. The fact is that it is resistance, the golden pocket, as well as the EMAs. So you should not actually expect us to go up, but if it does, that is telling you it's extremely bullish. The reason why I said we should not expect upside here is because of these specific fibs as well as the EMAs. They are resistance, and resistance by definition is the top of the market. So if it's the top of the market, we should go down from here. But we know in trading nothing's 100%, and even though this is bearish, one bullish thing can change it. So that's why I'm telling you the bullish thing to change it is break above it, hold it as support, then we flip this red box into a green box, because then it's confirmed as support, and then you'd basically head higher with your first target in and around 27.4k, and you see you have your targets up at 28.6 and 30k. And that's pretty much it for today's video. Please share it. Again, remember this is key resistance going forward, and we should go down, but I want to hold this golden pocket like this, break above it, confirm it as support, head up. Something like this is what I want to see going forward. Will it happen? No one effing knows. I don't know, you don't know, no one knows. Doesn't matter if you have 1 million subscribers, no one knows. But I'm going to do everything in my power to make you guys as informed as possible, and that's why we'll look at both scenarios, but be unbiased and just literally what's the word, react, instead of trying to predict, oh yeah, it's only going up, it's only going up. No, it could go up or down, and whichever it shows, that's how I'm going to trade. If you want to trade, or that's how I'm going to invest, or that's how I'm going to get out of my position, for example. Thank you guys, I'll catch you in the next one. If you want anything, any information on the education that I provide, that's all over on my Twitter. Private message me there. I do have a mentorship and a course. and that the crypto chat is included for that, with that as well. So if you're interested, head over to my Twitter, Louis_crypto. I'll catch you guys over there. Peace.